Hey, Travis here. My wife Alex and I got married last year. We've decided that we want future wealth and we're planning for that as part of a joint 5-year plan. Do we need to talk to a financial advisor, and what can they do for us?
Financial differences between you and your partner can really be a dampener to your relationship. Not being open about how money will be handled in the relationship can cause unnecessary speed bumps in an otherwise happy home. So is it important to find your financial match? And how do you deal with a partner that has bad financial habits? In this episode of Everything Counts, we talk relationships and money. Welcome back to Maya Fisher-French and Kgomotso Motloung, our resident financial minds, and we'll be getting into a topic that can be quite touchy if you're not honest as a couple, Kgomotso, because it's one thing handling a client that's coming in on their own and they have their own financial goals, but when they come in as a couple, how different is that?
It's so different, Motheo, because the smallest thing make the biggest differences, especially when it comes to couples, right? Even like values. What's your relationship with money? If you're in a relationship, that will impact your partner. How you see money, what you think about money, how you use money, that will impact your partner. So I think financial values are very important. But if we go into the details, I'll give you an example. When I first got married, I didn't know that my spouse sent money to her parents every month, whereas I fortunately didn't have to send money. But now it could happen, it could cause frictions. You're like, but now why are you sending money to your, and I keep it in the budget and so forth. So little things like that can have massive, massive impacts. But I think also then having shared goals, that's very important, in terms of, okay, what's your guys' 2-year plan, 5-year plan, and what are those financial goals? Do you want to go on holiday? Do you want to buy a bigger property? So all those are very important. And those are decisions, if you're in a relationship, you can't make by yourself. And we know it, guys. The number one cause of divorce is not necessarily cheating. It's more around finances, right? So it's so important that partners are on the same page financially.
Then this is not the most romantic question to ask on a date, how much somebody makes, whether they've got good financial habits. How do you then open up to your partner to say, okay, let's talk about money, let's be frank about it, and let's see if we're a match?
I think you can first of all tell from their behavior. So just watching somebody, is this somebody who likes to flash to impress? It's quite easy to see. Are they booking the most expensive restaurant, wanting to impress? You've got to start saying, okay, this person, prestige is very important to them. Do they have the money to back it? Is the other question. So you can start to sort of get a sense of that. And the same lies either way. Is this person pushing you financially? Are they saying, well, let's book the most expensive restaurant? And are you comfortable with that? So I think in the beginning, even when there's the romance and the love and all that, start looking a little bit for signals and signs as to, are you financially compatible? Do you share the same goals? I know somebody who actually ended a relationship that they were in because one of the biggest problems was the selection of the restaurant, because he earned a lot more than she did. She couldn't afford it, and he expected them to go 50-50. So already you can see before you get into that relationship their issues. And, I always say to someone, if you're going to get married to someone, ask them for their credit score first. I think being open about debt, because when you enter a relationship, you're going to be taking on all of that debt that goes into it.
It's a shared responsibility.
It's a shared responsibility. Yeah. And I think if you cannot have those conversations before you get married, is this the person you should be marrying? That would be my question.
How drastic do we get? Are you asking for somebody's payslip and you both going through it together?
I think if you are entering into a shared space, you're going to be sharing a home, you're going to be raising children, you have every right to know what each other earns. Why not? And if they're not prepared to share that with you, then do you really want to be planning children with this person?
Then, Kgomotso, just looking at the couple walking in, wanting to have shared values in terms of finances, where do you start with them to make sure that they both match each other's goals?
I think, as Maya mentioned, it's important to look at each other's credit scores and what's happening in bank statements, right? I think it's a good place to start, because I often sit in meetings where the husband speaks to all their financial plans. And then I'd ask the wife, and the wife's like, oh no, my husband handles all of that stuff. I always say in those meetings, it's such an important thing to address in that meeting, to be like, no, all that, just don't lie with him, because should anything ever happen to him, where do you start?
You also need to be in the know.
You understand? So even if he were to get sick or he were to get into a car accident, you need to know where you guys are standing. So how do you address certain things when you don't know what's happening financially on both ends? So I think a good starting point is that bank statement. Let's look at each other's behavior, and then you guys can make an informed decision to say, okay, are we where we think we are financially? And sometimes not.
I remember sitting at a dinner table, and of course, they know what I do, and then they all ask me for my financial opinion. And this woman was very, very proud. She said, I manage all the money in our family. My husband has his own business, and I manage all the money. So I said, what do you do? She said, well, I do all the groceries, and I pay the school fees, and he just gives me the salary every month, and I do it all. So I said to her, but where's the real money? And she said, what do you mean? I said, where are the investments? What happens if he can't work? What happens to his business? What is it? Her face fell because she thought that being in control of the money is the day-to-day spending. She had no idea that she needed to know about the investments.
No, I see that so much. And I think part of being solid is actually having a solid plan together. So how many times do we see that where something goes wrong? We don't know where to find a will.
There is no will.
There is no will. We see it all the time where we have a lot of unclaimed benefits with these massive institutions where actually spouses don't even know that the spouse had life cover or any other retirement benefits. So it's key. It's so crucial.
Sometimes, as a partnership, you could have met later in your life. So you've accumulated a bit of assets and your partner's also accumulated a bit of assets. So how do you work that out? To say, okay, you've got this much debt and you've got this much debt. Let's make sure that as a partnership, there's less risk between the two of you.
Essentially, there's a few factors we will look at, right? Marital regime, how you guys are married, that impacts you guys going forward. I think that's a conversation we need to have, because if we're looking at a marital regime where you married like A and C without accrual, would then look at your guys' assets prior to the marriage. Depending on how you draft the will to say, okay, we're excluding this or we're including this, it also impacts should a divorce or death occur. So I think having NAV, both couples before the marriage starts, it paints a picture, right? And then understanding the different marital regimes and then making an informed decision. Say, okay, we're going to get married like this because this financial situation makes sense. We're going to get married in communal property. It's not to say one is wrong, one is better. Objectively, as a financial advisor, I need to show the advantages and disadvantages of each, and you would need to make that informed decision.
In fact, in writing up the antenuptial contract is a lot of warning signs about your partner. If they are trying to hide assets or start behaving strangely or wanting clauses in there, those can actually be warning signals. And I think the other thing I just want to mention there is so few people understand that if you do not write an antenuptial contract, you are married in community of property. And that sounds all nice. I get 50% of my spouse's assets. You actually get 100% of their debts. You get married and suddenly that massive personal loans and all the issues that your partner enters the marriage with, you are now 100, not 50%, 100% responsible.
You've now touched on what financial services firms would be looking for in your partnership, because for them, it's a contract, it's a business between the two of you. There's no romance involved. What are they looking for in you and your partner's finances, especially in taking up assets like a home or a car? Who's going to be paying how and when?
Certainly. And I mean, of course, if you're married in community of property, both spouses will have to sign for taking out a home loan. What drives me completely mad is that a lot of personal loans and that don't get two signatures, and the spouse doesn't actually know the debt's taking place, but that's another issue. So certainly they will look at it. Now, if I look at my husband and I, when we came to Investec for a home loan, that home loan is my husband's name, but I had to sign surety because we're not married in community of property. So often they will ask for surety from the spouse. And so be very careful when you're obviously signing surety, very important. But if it's a joint asset like that, then it makes sense. But now what if your partner's borrowing money for their own business? Does it make sense for the spouse to sign surety because you're really trying to separate each other? So I think there's a lot of things that you need to decide as a couple, how to be quite strategic and deleveraging the risk to yourselves and your own balance sheets when you take on debt.
And Kgomotso, I mean, when we look at things like insurance, life cover, long-term investment options, as a couple, should you have the same financial goals, or is it okay to have different ways of looking at your finances when it comes to that cover?
Well, Motheo, there are core things that in your financial plan, you guys have to have the same values, but it's not all based on that. I still believe in a marriage, you still got individuals. Your partner's goals might be slightly different from your goals. It doesn't make it a bad thing. It's just to make sure that you guys are conscious of it. And as an advisor, I generally look at things like risk planning. So I plan around death. It's a difficult conversation, but we say, okay, if one of you had to pass away, what debts do we need to address? How do we make sure that debt can be removed and not necessarily laid? So we look at policies to address that. We look at things like disability to say, okay, cool. In the event of you becoming impaired or unable to produce an income because of a disability, what policies can we put in place? Even retirement planning. I think it's a conversation that a lot of couples don't have and we need to have, because at the point of retirement, what kind of a lifestyle do you want? How do we get there? So part and parcel of my job is helping painting that roadmap to say, okay, cool. In the event of unforeseen, what solutions do we have? In the event of planning for the future, how do we get you guys to get there? And your objectives might be different. It might be, I want to live the same lifestyle I'm living now post-retirement. And I would do the retirement calculation to say, okay, cool. If you want to maintain that living, taking into account inflation, cost of living, what do you need to do to get there?
I just want to interject there for a second, though, because one of the things that I'm seeing now as I'm getting to an age where I know people who are coming up to retirement is a lot of people get divorced before retirement or early retirement. And you've built your entire retirement financial plan on a joint plan. So I would suggest that people also need to say, well, if this marriage, I know it's always difficult, but what if there's a divorce or even a death obviously can be addressed with life policies, but what if you get there? Suddenly maybe that joint income looked okay because you're sharing expenses, but now what? So I think, and I do say this specifically for women, because obviously it tends to be, we're still in the world where men tend to have more of the assets over time because women have taken breaks in work to raise children. Make sure, please, that you also have your own retirement plan.
So when you have a partnership, it doesn't always happen in a marriage that you'll have children, but the likelihood that you are is quite real. So when you do have children, what conversations are you having as a couple? Where they're going to go to school, how expensive it's going to be, what the plan is around that when it comes to finances?
Choosing your child's school is so important because we all want to give our children the best possible education. But the way my husband and I framed it was, we will give our children the best possible education we can afford. And what does we can afford mean? And that meant we would never sacrifice our retirement savings for it, for example. And the other thing that when you do look at schools is to do the inflation calculation. It's going to be 10% a year escalation. So if you're entering your child at grade 1 into that expensive private school, what is that going to look like by grade 8? Or even if in high school, what is it going to look like by matric? Can you sustain it? And I think those are very tough, very real conversations, because parents will do anything for their children. Really, we will. We want to give them the best, but we cannot do it in a way where we see ourselves having to cash in policies and investments because we've run out of money for the education.
Yeah, I think, Maya, also what's important is actually planning for education, right? Like you say, when we look at normal inflation, it's at 5-6%, but we look at education inflation, it's 3-4% higher than that. So even planning for education is slightly different from just saving regularly from your savings. So I always say the sooner you start with the kids, saving for the education, the easier it actually is, right? And the beauty of having a long-term view on your savings is that you're not under pressure up front. And then you've got the beauty of compound interest. And then what will essentially happen is that when you get to that age, whatever goal you set, if you want to set up something for university and you want to set up maybe something for primary school or high school, it then paints a picture for you to say, okay, cool, for me to get there, what I need to do every month and what I've got to rope into my monthly expenses and my budget.
And I think, just to jump in on the kids' education part, is one of the mistakes I think parents make, especially if they're looking at high school, is they think they're going to save enough to pay all the high school fees. What you're trying to save up is to fill in the gap between the fact that the inflation rate on the schooling's gone ahead of your salary. So it's not that you're going to be cashing in the entire policy to pay all of their education. It's just helping you supplement it. Would be a good approach.
No, you're right, man. And that's very important, right? I always say to parents get stuck up on that number to say, okay, I need to get to 1 million. How do I get there? And sometimes it's not even getting to that number. It's to say, okay, how close can we get you there? And what adjustments can we make along the way? But starting is important.
Starting.
After this, we'll talk about how you can plan your financial goals as a partnership and why exactly you need a financial advisor.
As an Investec client, you have access to a dedicated Investec financial advisor to help you with your life insurance and investment needs. They are salaried and thus do not earn a commission on the advice they give you, ensuring that the advice you receive is completely objective. No hidden charges and objective advice with your trusted financial partner. Investec Life is an authorized FSP and licensed insurer. T's and C's apply.
Welcome back to Everything Counts. Look, Maya, before we get into the conversation around financial goals and why you need a financial advisor, you touched on something quite important around planning for your child's education. How do you go about that, and which particular products should one be looking at to save up enough money for all of your children to go to great schools?
Yes, I think one of the big, I'm going to be a little controversial here. I would start off by avoiding anything that has the word education plan in the product title. And the reason for that is these are often products that are marketed and sold as for your child's education, but it's no different than a unit trust or an exchange traded fund. You just need to invest the money, right? You don't need to go for an endowment that you're locked in for 5 years and high commissions or anything like that. You literally can go and take out a unit trust and just make sure that it's time appropriate. So if your children's school fees are due next year, that's not going to be appropriate. But maybe you're looking 5-10 years time, you should be investing in something with equities, with exposure to the markets. Now, just tell you a little short story. We had an investment for my son that we'd been putting money away. And we always thought, look, if we needed it for tertiary education, we'd pull on it if we ran short. And then he decided he wanted to go to quite an expensive college, which was a little bit out of our planning. And we tapped in on it. We cashed it in because there was no restriction on it, right? We'd actually had it a long time. And at any time, it gave us the flexibility. And we do have two separate ones. We had one for both individually for my two different sons. And, I just think we don't need to go off and buy special products for education. But maybe, Kgomotso, you've got some views on that.
No, that's spot on. I think sometimes a lot of clients get confused when they see the word education and they think it's a separate or different product. It's an investment, guys. It's just got a different goal, right? And generally what I say to clients, if you've got a longer time horizon, you can sit with something a bit more aggressive in the market because you've got time in the market, right? As opposed to when you've got a child going to school in 3 years' time, it's a different conversation. You probably need to look at something a bit more balanced, right? So planning for your children's education, it's having a long-term investment. And then depending on what your time horizon is, then we'll allocate that to the proper asset class.
And that also speaks to financial goals, right, Kgomotso? You meet a couple while they're still young, they don't have any children, but the goals are going to change because, they grow older, they have different interests or certain targets they want to reach. So are you always reviewing the financial plans as you go along?
Sure. I'd say that is so important, right? That is so crucial. It's actually a requirement. It's actually a phased requirement that you actually get one review a year. Yes, you might not necessarily want it, but it's so important, right? Because our circumstances change all the time. What the review allows us to do is to continually make those adjustments. So you might get an increase, but where's that going? And how do we make those adjustments to get you to that goal? So reviewing your financial plan it's so crucial. It's not something that's cast in stone. And also sometimes the negative can happen, right? Where you've got a reduction in income. How then do we then tailor that plan to still help you to meet your objectives that you've set for yourself?
Kgomotso, I have to jump in there on, when you get a bonus. This is the value of having a financial advisor, because if you don't have a financial advisor and you get a bonus, trust me, you'll find it'll blow somewhere. But if you set the meeting and you say, listen, I'm getting my bonus, you're going to have a plan with that bonus. And I think that accountability with a financial advisor, and we were talking a little bit about Travis and his wife, Alex, and financial goals. And, I think if you can sit down with a financial advisor who can help you tweak out those conversations and planning, it takes out a lot of that emotional tension, perhaps, between the couples, especially when there's a bonus on the table. If Travis gets that big bonus, maybe it's great that there's a financial advisor to help the couple come to a plan with what.
Sort of like a mediator.
A mediator, yeah. Absolutely.
So then looking at the financial goals, right, you have now sorted it out. You have a plan together as a partnership. What conversations are you having as a couple about what it's likely to look like the day that you're not there?
I think it's always a difficult conversation to have. I always say to my clients, what would happen if we were to remove your wife's or your husband's income? What does that picture look like? So for me, when we do the risk planning, is to say, okay, let's put you in a position. If your husband were to be removed, can you guys continue? Can your kids still go to school? Can you still see out those retirement goals? And often, the tool will shoot out a very high number. But I always say that people also don't look at the company benefits. I think that's another missing part. So we have a lot of clients who replicate policies and have a policy with the employer and don't ever address that. We have a lot of clients actually overinsured. To say, okay, but you've got this massive policy. What are you actually addressing? Are you addressing the liquidity in your estate should you pass away? Are you addressing the debt? What are you actually addressing? And understand that to say, okay, cool. Should I pass on? This policy will address this. This policy will address any estate duty costs that I might have in terms of winding up my estate. So Motheo, I think it's a difficult conversation, but it's one that needs to be had. And I always say that number that you get, sometimes it's an intimidating number, but also how you structure your policies will help you get there.
Come on to that. I just was waiting for you to say how you structure your policies. We saved so much money once we actually structured our policies, because whilst when the children are little, you need this big lump sum, right? Because they've got 10, 15 years of education ahead of them. But when they turn 25, you don't have. So why are you buying a whole life policy when you're only going to need it for a very specific period of time and ratcheting down? If you have a good financial advisor who can come up with, a structured life cover around those, it can become a lot more affordable. But I do have to tell you that after my mortgage, the next biggest premium off our account, frigging life cover.
I have to then wrap this conversation around a financial advisor. People are always willing to take advice from anyone that they deem that they trust, right? But they would never, walk into the offices of a financial advisor. Why is there such a big misconception? Why are you guys feared so much? So what do you do in that room that people are so afraid to walk in? And what can you tell people around, the importance of approaching a financial advisor and why they should be open about it?
Motheo, I think you're right. There's a massive stigma around financial advisor, right? These sales guys that try to get you into these policies to trick you and to get commission and duck. And fair enough, there was advisors and the industry wasn't as regulated in the past, but the industry is a lot more regulated. For you to be in a position to give advice, certain qualifications you need to have, a certain amount of experience you need to have. From a compliance perspective, there's certain things you got to meet as well. When it comes to your health, if you go and see a doctor, right? If you want to build your dream home, whatever the case is, you'll go and see an architect or engineer. But why is it when it comes to your finances, you just take advice from your friends at the braai? Why do you not consult a professional? So I think, Motheo, a financial advisor is very important. And I always say, in your first meeting, you can always determine whether that advisor truly is interested in securing your financial future or they're selling you a product.
What are those flags I should be looking for when I'm talking to my advisor?
I think most importantly, Motheo, an advisor that doesn't understand or listen to your objectives. Because at the end of the day, if your objective, right, is to make sure that your child's education is sorted, and the advisor is talking about a retirement or different product or an endowment, then you kind of know, but you're not understanding my objectives. So I think more than anything, right, every individual has their own personalized plan. I think a good advisor is going to help you get to those goals and you set the goals and not product push.
And Maya, as someone who's been in the financial services sector in different forms, do you still have a financial advisor yourself? Because people would think she's an expert. She definitely doesn't need one.
I do. And the reason is that I need a sounding board. And sometimes I need to check my own emotions. So sometimes I can get emotional, and sometimes you want to do stupid things with your money. So sometimes you do need somebody who can say, just breathe, let's calm down. And I also tap in and just get some insights into investment strategies and things like that. So I think for me, advice, and I've been in the market a long time, has shifted totally. So it used to be, and this is very important, you used to think that a financial advisor was to tell you who the next best performing unit trust was going to be, right? That's changed. Your advisor can help you make some of the most important decisions. Literally, the decision not to cash in your pension fund has a far bigger impact on the rest of your life than whether you chose X or Y fund manager. And somebody can help you make those big life decisions, I think, is actually what they're there for. They're not there to second guess which fund manager is going to outperform.
I think that settles it. If Maya needs a financial advisor, I think we all do, don't we? So if you like Travis and his spouse, we hope that this podcast empowered you to take the decision to make your future as prosperous and happy as it can be. Our next episode will be all about how to hit a home run in the property game. We will find out whether property is still a good investment, everything you should consider when buying a home or investment property, the best ways to buy a rental or holiday home, and the future of homes, specifically with sustainability in mind. You can also send your questions by using the hashtag Investec. Everything counts.
The views expressed are those of the contributors at the time of publication and do not necessarily represent the views of the firm and should not be taken as advice or recommendations. Investec Private Banking, a division of Investec Bank Limited, a registered credit provider committed to the Code of Banking Practices as regulated by the National Financial Ombudsman.